Sure. So I think, as we discussed last week, I think the thing is that these numbers aren't necessarily surprising. They're shocking, they're ugly, they're horrible, but they're not necessarily surprising. And so on the earnings calls, I believe that we investors and we analysts are looking a little bit through the numbers and trying to assess what the different management teams are saying and trying to look forward. I think we've written off 2020. I think we've said we know that earnings are going to be awful. We know that revenues are going to be terrible. We know economic data is going to be hideous. We know this. Let's do everything we can to start looking forward to 2021. We know the 2021 picture is blurry, but with each passing day and with each bit of information we're getting, that picture will become a little bit more clear. And the clearer it gets, the more we can start to do, the more we can start to build and recover and understand which companies are going to survive, which might actually thrive, and which will fail. So at least we're getting information. And that, to me, is a big deal this week.
Easier said than done, though, Joe, to be able to look past all of this horrible data. And we're going to get another jobless claims report tomorrow, which is going to be just as ugly, if not uglier, than the last one. And then we're going to have to decide what it means for the market.
Yeah. Well, Scott, I think what the market is deciding is as it moves higher and it gets north of 2,800, it has to compete in terms of investment capital with the credit markets. Above 2,800, the S&P 500 as a collective body of 500 stocks begins to look overvalued, and you have to really narrow down to a select maybe 25 or 50 stocks that'll be able to compete in that risk-reward balance with the credit market. So I think that's what's happening right now. And as the economic news is being distributed and negatively, you're seeing a pullback overall for the S&P 500. But I would urge investors to focus on 25 to 50 quality stocks that are going to be able, from a risk-reward standpoint, to endure that negative economic news.
Jenny, you, like many of our viewers, are a dividend hunter. So how are you thinking about these now going forward? Do you expect a number of companies to cut their dividends?
I do. I think that there will be all the companies that are obvious, right? The ones who need to take government funding. So the travel and leisure, Boeings, airlines, those guys are all going to need to cut the dividends. Then I think there will be companies who cut their dividends where the dividend was just a cherry on top. It was just an extra bonus to the investors. I think there are a significant number of companies, though, where the dividend is key to shareholder return. And these companies know that if they cut that dividend, that's all their shareholders are getting and what they're relying on. And they know that that's the way they return to the shareholders. And I think that cohort of companies, I think that they're going to stick with their dividends. And I think they have the wherewithal to do that. There are mature companies out there with high, strong free cash flows that will be able to maintain. A lot of them are the pharma companies like Pfizer and AbbVie, some of the telecom companies like AT&T and Verizon. There's no reason that companies like those should need to cut their dividends through this.
Joe, if there's one area...
But I'll say this. I think the number of solid... Sorry.
Nope. Go ahead.
Sorry.
Finish.
Go ahead.
Finish.
I was going to say, I think the number of companies with really solid dividends that you can rely on is definitely shrinking. Yeah. So my universe of investable companies is getting actively smaller.
Joe, if there's one area for our viewers to look at tonight, what would you say it is?
Look at the stocks that have already made V recovery, whether it be Amazon, whether it be Walmart, whether it be Abbott Labs, whether it be a name like Eli Lilly. These are stocks that have already traced out the V recovery. These are the stocks that moving forward will be able to endure negative economic news. These are the stocks that will be able to compete with the investment dollars right now that are gravitating towards high yield and investment grade corporate bonds.